Buenos dias, ¿cómo estás? Let's see, Cocktaila for any Russians that are watching. I guess for the AI, we should say like every language, and the AI would pick all of it up, and then people being served stuff they don't want. Okay, today's going to be a lot of fun. Well, fun if you're a nerd. If you're not a nerd, then it's going to be less fun. Okay, so we're talking to Byron Gilliam, and I was reading his pieces. So many of you have heard me kind of mention his name. I've been reading his pieces for quite a while. Very interesting. He's not a newbie. He's relatively recent to crypto, but he's not recent to finance. And so before I say hello to everyone, let me introduce Byron. Byron, what's going on, man?
Hey, Nick. Thanks for having me.
So real quick, just give us the elevator pitch. How on earth did you show up at crypto?
Yeah, the elevator pitch, I guess, is that I was an equities trader for about 20 years. I say 20 years, but it was a little bit longer than that. Just, I say 20 to make myself sound younger. And like the first 10 years of that was super fun. The next 5 years was okay, and then the last 5 years was not that fun anymore. So TradFi got progressively more algoized and more run by computers and less fun. And I was just kind of poking around, deciding that maybe there was something more fun to do, and I totally lucked into this gig at Blockworks, which is a great place to be.
And you give us an idea of what you do, because I would urge everyone, obviously check out the Twitter feed, but I get a lot of my news article inspiration. A lot of times I'll go see some articles in Cointelegraph and all that kind of stuff, and I'll try to excise out the ones that are clearly flawed or written by people that have been in the crypto space for like 16 seconds, or where there's a very clear like kind of angle on it. And I just try to get what's left of the news. And I find that Blockworks is a place where the news, it's I think I get something like every day, or at least every couple of days, which has a breakdown of a bunch of really cool news articles. And then you tend to have a piece at the end. And if you scroll down, you kind of have the last word. So how did you kind of win that position?
Yeah, it's a daily newsletter. I write something for it Monday through Friday. It starts with the news links, and then it's my commentary. They asked me to do that because their target audience, at least originally, was sort of TradFi guys getting into crypto or getting crypto curious. So they thought that I would be good at translating crypto for traditional finance people. Blockworks is now bigger than that. It's not just we're getting into metaverse and NFTs and the whole shebang. But the original target audience was traditional finance, and they felt like I would be good at speaking to that audience.
And so they're a news aggregator, but beyond that, they're also, are they going to start offering products, or kind of what's their, if you can even tell us, what's their kind of forward-looking kind of statement? Like if you were at Blocks, where you say, hey, over the next 3 years, we're going to accomplish what?
Well, the original iteration of Blockworks was staging conferences. And that's still a really big activity for us. We've got a huge one coming up in May, permissionless in West Palm Beach, which is going to be, I think, like the biggest crypto conference ever. It's like, I don't know, 5,000 people or something crazy. They're taking over all of Palm Beach.
Nothing but Lambos.
So that's a big part of the business. And then about 12 months ago, I think, they started the website, which is, a news, a daily news service. There's the newsletter. And then the most recent development is we are starting a research department, which I'm super excited about because there's not a lot of that in the crypto space, and especially coming from TradFi, where you're used to having just a fire hose of research every day to look at. There's just very little of it in crypto. So I think that's basically it. It's conferences, the website, the newsletter, and the research department. And Blockworks has big ambitions. I think probably the elevator pitch would kind of be to like the Bloomberg of crypto without the terminals. Blockworks has big ambitions.
So they're not really looking at launching products. Like, for instance, you have Weiss and you have Weiss ratings. I could see you guys doing like a Blockworks ratings type, with your analysis, like a rating system or something like that, and coming out with like kind of quarterly, or well, in the crypto space, probably monthly ratings. That would be kind of interesting. And then you could cull a lot of these rating agencies and start to get something that looks more like the traditional financial system, where we have hopefully, ratings agencies that are not on the hook to, VCs and things like that, and that we can kind of trust. And that would be very interesting to me. And then a trusted news source, which is again why I go back to Blockworks on a regular basis, because it's one of the very few, news sources. And of course, if you look at any 12 articles, 6 of them, and this is anywhere in the crypto space, 6 of them you're probably going to find a bend to, because as a journalist, I think you understand that we're journalists, but we're also investors. And so we're always going to have a particular kind of angle on the things that we write. And even though we might try to stay on the sidelines, you kind of can't, right? Especially the first dollar in, you're now emotionally attached. And so I do see less of that with Blockworks, which is, again, one of the reasons why I think people should definitely take a look. So before we get to the guts, and we're going to go through the markets, and we're just going to we're going to go all over the place. This will be a very whimsical discussion, but poignant. Let me say hello to, let me go over to Theta really quick and say hello to Scorpion, Unsung, Gordon Bennett, Queen J, CC Brown, Barry Vice, Sniper Princess. You don't want to make Sniper Princess angry, I'm guessing. City Medyanko, Stress Relief, Ask. I know that if I don't pronounce that right, I'm going to get a violation of something. Megapack, Biotech Breakout, Thico, Adelaide Luno, Hude, Belinda Cook, and Wupepe. Wupepe. Maybe that's it. That sounds like a blockchain. Kinazal. Cool. And then over here on the YouTubes, we got Jimmy James. Hello. And let's see. Elipal. What's going on, guys? Joe Fernandez. ¿Qué onda? ¿Cómo estás? Todo está bien. Patricia Scorpion. Tube that pipeline. So that if you, Michael Murphy, expat Matt, Johnny, where you didn't say where you're at, Johnny. Johnny is at a different location every single day. He kind of floats around the world. Tim, Demayan, our chick, what's going on? Sylvia.
Are we KYCing all these viewers? Are we sure that they are who they say they are?
They've all been KYC'd. AML, everything. And I send them for proctology exams as well, just as a final measure. Nara, Bitcoin Candy, that's a little shout out to Maxine Waters. Belinda, Kasperi Cloud, Brian, what's going on? Crypto for life, love it. Rod, Tiffany, Sebastian, Biotech Breakout on both sides. Sebastian, okay, cool. I think we pretty much got everyone. EOJK, got it, great. Okay, let's do a quick little break. I'll do my non-commercial, commercial, non-commercial introduction, and then we'll be right back. And Byron and I will get into the guts. We will see you in a second. Okay, so without a long kind of exhausted coin by coin We're not going to do that. What we are going to do is, as we kind of look at what's going on in the markets today, I'm going to pivot off of Byron a little bit and what he finds interesting. And we were talking just before the show started about some things that were interesting to us over the weekend. In regards to the Bitcoin itself, we're at 43 and change, almost 44K. So we're up quite a bit. We're up 15% on the week. We finally are all green. That is the daily, the weekly, the monthly, the yearly. So Bitcoin has at least stabilized, and we've been melting down for two plus months. Byron, how do you kind of look at what's happened? Let's take the bigger view that from November until now. What does your gut tell you is going on in the space?
My gut is telling me that I don't really know what's going on in the space, to be honest. It's been super interesting. The bounce the last couple of days has particularly surprised me, because we had the jobs data on Friday, which is which would make you think that interest rates are going higher, which should be negative for Bitcoin, right? But Bitcoin had this huge rally. But prior to the jobs data, Bitcoin was more correlated to risk assets than it was to interest rates. In particular, it was super correlated to the ARK fund, which made me think that people are looking at Bitcoin as speculative tech rather than store of value, alternative reserve currency. But yeah, that narrative kind of got messed up by this huge bounce that it's had. So I don't know what to think of it at the moment.
Let me ask you this. This kind of pivots us to another interesting question. A lot of people have the Bitcoin is or as an inflation hedge argument. I do not agree with that. I see that there is some cross kind of contamination, right? Like you could get some feedback from that argument. But I don't think that's a proper argument. I don't think people should be saying that if inflation, I should own Bitcoin, because in that case, if you go back in history, all you'd ever do is break even, which I guess that's cool. In a store of value, you'd love to break even against inflation and not at least lose. I tend to look at it a different way. What do you look at Bitcoin as? Is it a hedge against inflation? Is it a true kind of digital store of value, or what's the lure of Bitcoin to you?
I think it is definitely a hedge against inflation. It's a hedge against tail risk inflation, right? So I think it's a hedge against hyperinflation. If the U.S. government collapsed, or if the dollar went into free fall, then Bitcoin should be a really good hedge against that. I don't think it's much of a hedge for whether inflation is 2% or 4% or 6%. That for one, the correlations just suggest that it's not much of a hedge, and for two, I don't think it makes that big of a difference. I just don't think people are going to go en masse from US dollars to Bitcoin because inflation is 4 or 5%. I don't think that's enough to really move people. Personally, I'm not store of value is not that exciting to me, because I feel like there are other stores of value. There's, you can buy real estate and you can buy equities, and those are actually, better than stores of value. Those are grows of value. I don't know, they grow value. They don't just store value. So I've never been hugely sold on the store of value argument. I do think Bitcoin should replace gold slowly, because it's a better version of gold. But yeah, I guess that's where I stand on that.
So essentially, you don't kind of buy into the Bitcoin is just a better version of tips, right? And I don't personally.
I mean, I could see where that would make sense. I mean, longer term, it seems like Bitcoin should be correlated to real rates, or inversely correlated. Negative real rates should be a driver for Bitcoin. But it's hard to see that in the time frames that I care about. I have a short attention span, so if it's not working right now, then I am going to lose interest in it and go do something else.
What was your kind of OS moment for Bitcoin? Like, what was the point where you said, okay, I have to buy in and make my first kind of Bitcoin purchase? I'm assuming you own some Bitcoin. What was that first moment like?
I own a little bit of Bitcoin. My first Bitcoin moment was way back in like 2011, I think it was, when a friend of mine sold me on it. He explained it to me. I didn't totally understand it, but he sold me on it, and I said, "Okay, I'm going to do it. I don't totally understand it, but my friend is like sounded very high conviction. I'm like, okay, I'm going to do it." I said, I decided I was going to put 10 grand into it. And then I was like, okay, how do I do it? And then it was like, I had to go into on a chat room, and I had to like make a deal with somebody, and then I was going to send them the money, and then they were going to send me some keys, and I didn't really understand what the keys were. I was like, I can't do it. So I unfortunately did not do it. And then a few years later, 2015, I kind of went down the Bitcoin rabbit hole I was like, I got to figure this out. And I unfortunately decided that it was not going to work, because at the time it was right around the time of Bitcoin Cash, and the argument was, Bitcoin's limited to 21 million, and then all of a sudden there was Bitcoin Cash. I was like, okay, so now there's 42 million. Like, there's just this is not this is the opposite of limited, right? You could just keep copying and pasting it until there's infinity. So I bought one Bitcoin just in case, which was helpful. So that was good. And then 2017, I kind of got caught up in the ICO thing, bought a bunch of things that all went to zero. And that kind of spoiled my interest in it for a while, until about 6 months ago when I got back into it, based on DeFi, because I all of a sudden found out like all these wild things are happening in DeFi. And that's what really got me interested again.
So that's kind of interesting. So what was the first DeFi project that made sense? I mean, were you one of the curve compound kind of, where you went, wait a minute, are they doing real-time arbitrage? Like, where does the money come from? Like,
the first thing was farming, yield farming. And to just try to figure it out, I stumbled onto Osmo, in the Cosmos ecosystem. Didn't really understand what it was, but I figured out that you could like yield farm, and it only costs like a cent or less than a cent to move things around. So I did some of that just to figure it out, and that's probably been my best investment so far. So the thing that I knew the absolute least about has turned out to be my best investment, which tells you something about my investing skills. But that's what kind of sparked my interest, was the yield farming.
So, and that's something that's kind of a constant theme, or at least a theme that I've seen repeated several times in your work, is you look at DeFi, and I'm guessing we both agree that DeFi has a very good chance of building a bunch of financial products that would make sense in the near-term future, as the traditional financial system starts to employ various decentralized options, or things that kind of alleviate stress in the traditional financial system, or legacy, or whatever you want to call it. So when you came into DeFi, how did you explain to yourself what yield farming was, and how do you explain to other people? Like, if grandma, came over and said, "What is DeFi?" How would you explain DeFi to, at least yield farming, to grandma?
Well, the way I explain it to myself is by clicking the buttons. Like, I don't really understand something unless I actually do it. So like, to understand Curve, I've got to put like, $1,000 into Curve and just see what happens, which stinks in Curve because it's Ethereum. So it costs $100 to put, to put $1,000 in there. It's just a pain, which is why I still, why I like do stuff on Phantom and Cosmos, because it's basically free, and Polygon and things like that. I have not had a lot of success explaining it to others. I gave it a try over Thanksgiving and Christmas, and I did not win any converts whatsoever. But in fairness, I don't really think normal people should be doing anything in DeFi. It's only really if you're super interested in it and you're willing to put a lot of time into it. I know, even me personally, like, I still struggle with the idea of having a significant amount of money in a blockchain. Like, it just kind of worries me. I had this weekend, I was planning on buying some land in the crypto unicorn metaverse. You have to do that on Polygon, and like the Polygon bridge wasn't working. So I was like, okay, I'm gonna send it to crypto.com, and then crypto.com I can send straight to Polygon. So I sent 0.1 ETH just as a test to make sure it would work to my crypto.com address, and it did not get there. And then I looked back at it, and it was like I sent it to some address that I've never heard of. I'm guessing I think I must have like a virus where they can like get in and change your copy paste or something. So
first
like,
three, last three. First three, last three. You got it's old. You got to look at the first three, look at the last three. I've had something like that happen on a PC, which is why I will never use PC ever again. I'll only use Macs. And it's not
I was on a Mac. It's also possible I just copy pasted the other thing, but I was looking around. I was like, I don't know how I could have possibly copy pasted this. Anyway, the point is that like even me, I spend an inordinate amount of time thinking about these things and messing around, and I still do stupid stuff like that. So I can't suggest anyone else do it unless they're like, unless they're really going to spend a lot of time on it.
It's tough to get DeFi right because there are a lot of steps. It's tough to get it right with Ethereum, which most people are comfortable with, but we should be and are understandably uncomfortable with the fee structure and this fee paradox of Ethereum. And let's for a second assume that they don't meaningfully scale in the next year. This is kind of an interesting discussion. So I think DeFi has tons of really valuable tools. And in my mind, I look at DeFi as, okay, there's a lot of gumminess and inefficiency in the space of these illiquid exchanges for the most part. And so the whole crypto space is illiquid tokens on illiquid exchanges being traded by sketchy or dubious individuals. That's kind of crypto, but that's also every other market, if we're being honest. When you look down, if you dial down to the molecular level, even equities are illiquid simply by the fact that they trade for like 8 hours a day and not the other 16 hours of the day. So there's all sorts of ways you could kind of gauge that. But in the crypto space specifically, there's a lot of murkiness. And as the old philosophers in Japan would say, is that the fish will prosper where the water is most murky. So I think DeFi right now, what we're seeing are these cool financial products that are fortunately or unfortunately being tested against a live market with real currency units. Like the testing environment, it just happens to be a real environment. So that's very dangerous because you have flash loan exploits and you have rug pulls and all these kind of things that might be better off in a video game environment where there's less real currency units, but then there's no motivation to play it, right? So there's a certain degeneracy, a certain gambler's mentality that comes into DeFi, I think, at least, and says, I'm not exactly sure how this works. Classic example is Badger DAO. When my buddy is a software engineer who's worked for everybody, and we were looking at Badger DAO with one of the early devs that did some work for them, and I won't say his name because he may have NDAs and stuff. And he said, I had to exit because I don't know exactly what we're doing, and I don't think the rest of the team does either. And I thought that was funny. And I have a rule that's no food products and no animals. I won't invest in anything named after a food product or an animal, just as a general rule, right? And then the second rule is the 2 Russian rule. Any project with 2 Russians, I'm out, right?
You're really limiting your options in DeFi.
It's not a lot left, right? There's only like 2 things left. But when I look at DeFi, I basically look at it as something good will come out of this. And unfortunately, it's going to take us 10 or 20 or $50 billion worth of losses before we find that kind of battle hardened code that's got a real game theoretical, algorithmic, solid, proven, proof laden background. But we are not there yet, which is why it's kind of like this big risk reward thing. So in the same way that you had a couple of at bats, but you didn't quite get into Bitcoin, what made you finally pull the trigger on, like you got in a Cosmos backed DeFi play? What made you pull the trigger there? Like what made it clear enough that you were willing to take the gamble?
Really, it's just because it's fun and interesting. Like I think I'm attracted to the complexity of it. Like I just want to figure this out. Like how is like when the original thing was the APYs, the 300% APY. I was like, okay, I've got to figure out what's behind this. So the attraction to me really is the nuance and the intricacy and the complexity, and I just think it's a lot of fun.
You had in an article that you did last week, last week or the end of the week before. You did something very interesting when you were looking at some kind of market unwind. You started going through the daisy chain of events that would happen as a result of, and I wasn't sure if it was a liquidity pool that was pilfered, and then you went 1, 2, 3, 4. Okay, if this goes down and this goes up, that means they're going to reprice this, and three coins over, I've got to exit before this kind of works its way down the daisy chain. Can you kind of give me, do you know which article or event you're referring to?
Yeah, that was after the Frog Nation stuff, and the kind of mini run that happened on MIM. And that was just, again, it was just super interesting for me to watch. There was the Frog Nation thing with the CFO in quotation marks that made everybody question that whole network of interrelated protocols, of which one is MIM. And MIM being a stable coin to me is like the equivalent of a money market fund in TradFi. And if you were around in 2008 for the great financial crisis, the thing that really made the financial crisis acute was when money market funds broke the buck, when they traded below 1, and that's when markets really freaked out, and that's when the Fed had to get involved. So to me, stable coins are the money market funds of crypto, and when the Frog Nation stuff happened, MIM traded down to like 98 cents. And that I felt like, I was like, okay, this is going to be interesting. Like, what happens when the thing that everyone thinks is supposed to be worth $1 is actually only 98 cents? Does it go to 90 cents? Does it go to 10 cents? Does it, and as it happens, there could have been a whole series of knock-on effects from that, from MIM to UST to Luna to Anchor. But it didn't really happen. There was like a little bit of each of that happening, but the market just took it right in stride, which I thought was one, impressive, two, not something that necessarily would have gone so well in TradFi, and three, I thought was just like a credit to the whole space. Like the stuff that's being built is got this really smart design behind it, and there are real substantial things being built.
So when you were looking at that, this is so there was essentially news about one of the directors, right, that had some kind of nefarious ties. Was this the indirect tie to Quadriga? Is that what that was?
Yeah.
Okay, so without kind of rehashing all that, which is a very interesting story, actually. So there's going to be a few stories, 5 years from now, that people look back, very interesting kind of crypto landscape. One will be the way Karpelès either engineered or at least dealt with MTGOX. That's a different story for a different time. We'll let the Japanese regulators sort that out. But the other one will be the Quadriga, the disappearance of the CEO and all of that madness. And then the people kind of related to him. So this was a guy that was part of that board, right?
Yeah. They refer to him as the CFO of Wonderland Time and Frog Nation. I'm not really sure what that means. Like, DAOs are not supposed to have CFOs, but that's right. That's what he's referred to. I think he was, I guess, like the lead guy for Treasury, like the Wonderland Time Treasury, which kind of makes him a pseudo CFO.
Okay, so he comes over, and so there's already, and just the Quadriga, that's another cool kind of situation where if I have my facts right, the at that time CEO went to India, right, to go vacation alone, and then just.
I don't recall. I'm not sure what happened with that.
Pretty interesting story. The only guy that has the keys to the safe goes missing in India, where people go missing for like $400. So anyway. This all happens. This creates a little discontent, or at least concern at. So where did the contagion start? What was the index case? So you had which two tokens or which pairs started to unpeg and unhinge first?
Well, I guess it started with Wonderland Time, which was all of the Ohm forks were sort of collapsing already, and then this news put Wonderland Time into full meltdown, because it just questioned the integrity of the people behind the project. And Wonderland Time is part of the Frog Nation, of which MIM is the central thing. So that made people question MIM. MIM is often paired with UST.
Another super trusted coin.
Yeah. So there were like very large pools of stable coins in Curve that had either just MIM and UST or MIM, UST, USDC. Like there's there's the tri pool and the whatever pool. So people were pulling out of those pools. They were withdrawing their LPs from Curve to reduce their MIM exposure. So they were removing their liquidity from the Curve pools, selling the MIM, and then selling the other things they had against it, which was largely UST. So MIM was trading at 98 cents. So people like even I think Alameda were withdrawing money from Curve, selling the MIM and taking a loss. So they were concerned enough about it to take a loss in MIM. And because they had UST on the other side of that liquidity provider arrangement, they were also selling the UST. And when you sell UST, what's supposed to happen is that Luna gets issued against it in order to keep the UST peg at 1. So the chain of events was Wonderland Time led to selling of MIM, which led to selling of UST, which led to selling of Luna. And it was easy in my mind to, for my TradFi mind, it was easy for me to imagine that series of events, snowballing into a much bigger crisis than actually what happened. So it was interesting to me that MIM was able to trade at 98 cents and then get back to $1. It was interesting to me that there was a lot of selling in UST without Luna entirely collapsing. The whole chain of events turned out to be much sturdier than I expected it to be.
So, and that kind of points me over. Let's talk for a minute about. I know this has been talked about ad nauseum, but I think it's worth kind of framing the UST situation just kind of from a 10,000 foot view. Is that Tether is not without its own problems. We know based on what Tether has said in court filings and otherwise. And to be fair, nobody has really of the criminal prosecutions, no one has been prosecuted yet. Well, let me say this: no one has had their day in court yet. They're all getting ready to be prosecuted. Every single one of the executives at Tether. So keep that in the back. But the Tether, the token, is about 2.3 or 2.4% capitalized with actual cash. The rest of it's very nebulous. So I don't think the crypto community really cares. Tether has always been sketchy. Tether has always been, in my mind, an illiquid kind of quasi asset, no different than wildcat money, right? In the early kind of wildcat banking days. I don't think there's anyone on earth that actually thinks Tether is backed by much more than kind of hope and fairy dust. But to move in and out of Tether seems okay to me. To hold Tether like in a liquidity pool seems a little bit scary to me. And of all of these assets, when Tether is your most stalwart asset, I'm uncomfortable with the whole daisy chain of possibilities. What are your thoughts just on Tether? And let's say at some point there is a real full financial audit and we discover Tether is, as they claim, 2.4% capitalized by US dollars. Does that do anything?
Yeah, so I mean, I think you have to distinguish between algo stable coins and collateralized stable coins, right? So Tether is a collateralized stable coin. UST, MIM, those are algo stable coins. So the contagion the daisy chain version of contagion is going to be an algo stablecoin issue, which is what we had last week with MIM and UST and Luna. The collateral stable coins have their own risk, but they're a little bit different. Those are kind of, I wouldn't call those contagion ones. Those are sort of event risk. Like the event risk is that someone figures out that, oh, Tether is, Tether is a scam, or the SEC tells Circle that they need to stop letting people print USDC or something like that, right? So I think the collateralized stable coins are more event risk, whereas the algo stable coins are more daisy chain contagion risk. I don't know enough about Tether to really have a serious opinion on it. My only observation would be that, like, the longer it goes without collapsing, the more likely it is that it's not going to collapse, I would think. I've always thought that Tether was the biggest risk to crypto, but maybe it's just, it just seems like if it was going to happen, it would have happened already. So I personally am getting less worried about it. There's also so many other stablecoin options now. Like, for a while, Tether was the only option. Now there's, dozens of them. And there's USDC, which is, people, anything you can do with Tether, you can do with USDC. So if I'm starting to kind of think, like, if Tether was really that bad, then something would have happened already.
I think I'm in your camp. I mean, I have a buddy of mine who's a hedge fund manager, and we have dinner every Sunday and kind of talk about the markets. And he came to me a few months ago and he said, man, this Tether thing. I said, yeah, but we knew about this Tether thing 5 years ago. No one cares. He's like, how? I said, I don't know, but just no one cares. We know it's phony. We know that most of these assets are phony. We're okay with the idea that you can create 100 trillion tokens, issue 4 of them. The 3 of us can trade it, and we can have a market cap of $44 trillion tomorrow if we want. Like, people are okay with these weird, ridiculous numbers. And it's just, I don't know if anybody really cares. So I think generally people understand that that these collateralized stable coins are somewhat collateralized. There is no asset out there that's 100% collateralized, because there's a fee structure in there somewhere where the company managing the money has to, make something off the deal. So I think that people are just okay with that. So then I want to ask you, what do you think is the future? My guess is collateralized stable coins are the kind of 1.0 version, and these algorithmically managed and backed stable coins are the 2.0 of stable assets. Where do you kind of come in on that?
I think it's great to have both. A lot of people are going to be more comfortable with USDC because they just want to put their faith in a traditional financial institution like Circle, which I can totally understand. Crypto native people are going to be more interested in being permissionless and not putting their faith into anything, and they're going to, they're going to want an algo stable coin. There's also a camp that says that an algo stable coin is never going to be truly reliable, because it's just always going to be, there's just always going to be too many interdependencies. I kind of think that we're going to be able to iterate on these things fast enough that we're going to find out what really works in algo stable coins. I suspect, the current crop of them are acting really good. There's, we'll find out if that's sustainable, but if it's not, I think the stakes are still low enough that, the current stable coins could fail, and the next iteration of them will be better and will be eventually bulletproof. But yeah, I think there's just going to be a lot of options. I think it's going to be like the Middle Ages, where there wasn't a single currency issued by the king. There was dozens of currencies circulating all over the place, and everyone got to pick which one they trusted.
With these, so this is kind of a question pivoting off of this question. JR asks, is Terra legitimate? How much do you, because you have a certain amount of trust in DeFi. If you have any currency units in there, you trust at least some aspects of it. So how far do you go when you look at code? I mean, are you a code as law guy, or are you a I want to look at the team and see who's, John Wayne Gacy painted some amazing paintings, right? He was a serial killer, but he was a great artist. How much do you separate the two and how much do you merge them together? Obviously, Terra, there's some questions at Terra as well. This kind of whatever this back and forth is between them and the SEC and all this kind of stuff. Like, at what point do you say everything outside the code is or isn't important? And does that kind of come into your, when you're estimating where you would put your currency units?
Yeah, I mean, I don't read the smart contracts myself. I probably should learn how to do that. But I'm not a coder. If it wasn't, if it's not codable on a Commodore 64, then I probably can't do it. So I guess, I mean, I just kind of try to use common sense. I mean, I certainly think Terra is legitimate in the sense that it's not like, I don't think Do Kwon is out to scam you. Do Kwon is a wealthy person and he's an ambitious person. He's not trying to scam degens for 100 million or something. He's trying to build a multi-billion-dollar empire. So it is, I think it is, I'm sure that Terra is legitimate in that sense. It could still fail because there are a lot of interdependencies and there's a lot of moving parts, and he's buying time with the tokenomics that he's got involved with Anchor and the really high borrow APIs and stuff. But he's buying time to build real applications with real utility. And if he is able to build that ecosystem around UST and Luna in time, if the tokenomics buy him enough time to build that ecosystem, then it's absolutely going to be a huge success.
So Crypto Gamer said the reserve of ANC is 17 million. When this runs out, won't the entire Luna market come crashing down, since it's based on the Anchor protocol for the 19% APY? Now, full disclosure, I'm not deep in the Anchor kind of tree of news and kind of peripheral data. So I'm going to obviously leverage Byron for this one. What do you have any thoughts on this? Is this statement relatively? Yeah.
I mean, that's definitely a concern. I think that for one thing, I am pretty high conviction that the ANC reserve will be topped up at some point. But I don't think you have to rely on that. The 19% was never really sustainable into perpetuity. I think that if you took out the ANC borrow subsidy, like maybe the APY goes to 8 or 9%, and I think the 8 or 9% probably is sustainable. And people won't like it when it goes to 19% to 8%. People won't like it, but I don't think that should threaten the entire ecosystem.
So I've got a question. What do you think is a fair? So for instance, you park your money in the traditional financial system anywhere. 7% is like outrageous, right? Like, and that's some of these like series. What are they called?
If you're getting 7% in TradFi, you're probably being scammed.
Right. Like you go into any boardroom and say, I can give you 7%. And they say, get out of here. Don't validate his parking and arrest him if he ever comes back. Right. But in the crypto space, 7%, people are like, I'm only getting 7%. And I don't know if people realize like how quick even 7% takes a small amount of wealth and compounds it into a magnificent amount of wealth. What are your thoughts on what the premium is between traditional financial products and crypto products, and what is a fair APR that you would say above this, alarm bells goes off? For me, anything above junk and alarm bells go off and say, dig deeper, dig deeper. Anything above 6%, I have to dig deeper, because from the legacy perspective, anything above 6, you should be thinking that you're in junk. So what is the kind of the line in the sand for you when you look at a decentralized or semi-decentralized financial product that's paying X amount of interest on a regular basis? Where do the alarm bells go off for you?
I think it's different than TradFi. Like, in TradFi, if the alarm bells are kind of double digits. If something is paying a 10% plus 10% plus yield, then you really have to question how that's happening and if it's sustainable, and if that's just an indication that what you're buying is just very dangerous. In TradFi, in crypto, in one sense, I think you can be more trusting because there is a genuine shortage of capital in crypto. There is real demand for capital, which there is not in TradFi. You know, in TradFi, there is just infinity capital. So there's no reason for anybody to pay you for your money. In crypto, capital is very limited. So there is very good reasons for people to pay you 8 or 9% just to use your USDC. So in that sense, I think you can be you can maybe turn the alarm bells off in that sense in crypto. But the problem for me is that, like, you know, UST pays 19%. To me, the risk to that is that it goes to 8%, you know, which is no big deal. Fine. You could just switch into something else. You can go into Yearn Finance on Phantom and you can make 15% on USDC, which I've done, which is amazing. Like 15% for something that is pretty close to risk-free is amazing. The problem is that you have to be comfortable putting a lot of money on the Phantom blockchain, which I personally am not. Like, if I could get a near guaranteed 15% on my Vanguard account, then I would have a 100% allocation to that. I wouldn't own any equities. I wouldn't own any real estate. I would just take my 15% on Vanguard and not think about anything else. But, you know, how much money are you really going to transfer to, you know, to MetaMask and then send it on the bridge to Phantom and then put it on Yearn, who is, you know, looping some stuff on Curve? Like, you know, I love that 15%. I'm just not going to do it for a huge amount of money.
You know, you brought something up there. When you were talking Vanguard, how worried are you about the passive indexation effect in traditional finance? Let's forget crypto for a second. In TradeFi, of a big, well, let's not call it a manipulator, but a big buyer in the market, the buyer of last resort, becoming the seller of last resort with no buyer of last resort, and the potential gap down problem. I'm sure if you've heard Mike Green kind of talk about this at length, this passive indexation effect, where if this machine gets big enough, then all of the buying is occurring at this one entity across a spectrum of assets like in the S&P. And then when they quit buying, when people become net sellers, there is no buyer left because that was the margin buyer. Do you see that as an issue?
I've never been worried about indexing. Like, you know, when friends and family ask for financial advice, I just tell them to just put it in a Vanguard index fund and don't ever look at it. You know, I'm not sure what percentage of equities is in index funds right now, so I probably shouldn't be saying this, but I think it would have to be multiples higher before I worried about it. I mean, just look at GameStop and AMC and Tesla and the volume in equity options. I mean, active stock picking is alive and well. It is at a huge resurgence over the last couple of years, maybe just because everyone was really bored during the pandemic. But you know, prices are being set by active investors, a lot of whom are using ETFs. Like when you pick a tech ETF or an ESG ETF or whatever, that is also an active investment, right? So I personally do not see indexing as any real risk to financial markets at the moment. Theoretically, there is some point where it would be a systemic risk, but I don't think we're anywhere close to it.
Do you think, and again, another pivot, because I find this interesting, do you think that the kind of the time of COVID was this relatively low IQ new entrance into the market, almost the active investor coming in, punting off the couch? They're at home, they're collecting a check. You had it. I mean, the Robin Hood kind of effect. How do you see that time? I mean, I believe the aggregate IQ in all areas of finance went down over the last 2 years, simply because you poured in a lot of people that, you know, and I don't like to say that you have to be of a certain intellect in order to invest, because that's not fair. but I do think that your aggregate investor feels safer in a fund where someone else is kind of flipping the switches. And then you have the activist investor that comes in, and if the relative IQ of the activist goes down, then you get some very interesting effects. How do you kind of characterize what's happened since COVID and, stimulus money entering the market that maybe should have been going towards rent, but why pay rent when governors say don't pay rent, right? Like,
yeah, but I'd be very surprised if there was a positive correlation between IQ and investment returns. I haven't seen that study, but I would be surprised if that's the case. For two, I mean, the very, very smartest people in TradFi are just also extremely unlikely to outperform the index, right? So, so I don't, it's not just about smarts. I also think that's probably not the right mental model to think about what happened in the pandemic. For me, the mental model is that you had an influx of people who were trading equities or investing in equities for different reasons. A lot of them were in it for entertainment. A lot of them were in it because they wanted to stick it to the hedge funds and stuff. And they just had, a lot of them were in it for a community. Like, it was really fun to be in those Reddit chat rooms, and they wanted to be part of it. So to those people, the value of owning a share or 100 shares of AMC is in the community that they get in the Reddit chat rooms. They don't really, the value is not the DCF model that says AMC is going to be worth whatever in 10 years. The value for them is what they're doing right now. So
they're not discounting cash flows over on in Reddit.
They might be. I don't know. I don't actually spend a lot of time in Reddit. But to me, it's just that you had a lot of new people in the market who were doing things for different reasons.
So I think this is a good segue, because I think there is an ancillary to what's going on in the NFT space. And you are a relatively new entrant. You've welcomed the degenerate forces of the NFT investor. I am an NFT degenerate myself, and have been for quite a while. I tried to enter under the auspices of really caring about artwork and all this, but if we're being honest, it's not so clear cut, right? So I came in technically I've been in the NFT space for a long time, but not an active participant the way I am now, where I really study it and try to kind of game out some of the payoffs and incentives and things like this in these different projects, and try to guess, what was your first foray into the NFT space, and what was that like? Because I know you talked about that last week. It was kind of interesting.
The first foray was only about a month ago, and a colleague of mine, Sam Martin, in the research department, he's got his ear to the ground to all these kinds of things. He was telling me I should buy a Fluff World rabbit. And I was like, okay, what's a Fluff World rabbit? So I poked around, and I was like, okay, it's a picture of a rabbit. What does it cost? It costs 4 ETH. So I was like, okay, it's $12,000 for a picture of a rabbit. Are you serious? But he started to tell me about the whole community, and how there's going to be, and how Snoop Dogg Snoop Dogg came a little bit later. So, but he was, describing the community and all the plans that they had and stuff. And he sold me on it. I was like, okay, fine. I'm going to scrape together 4 ETH. I'm going to buy one of these rabbits. And by the time I got the 4 ETH together, it was at 5 ETH. And I said, what's happening? He said, oh, Snoop Dogg is buying. I was like, oh, great. And I was thinking, oh, I can't pay 5 ETH. I was like, it took me long enough to get my head around the idea of paying $12,000 for a picture of a rabbit. I just couldn't do 15,000. And then it was 6 ETH, so I was getting massive FOMO. And he said, well, check out these things, these party bears. Those are only 2 ETH. So I looked at party bears, which are like a related project to Fluff World. And I just really got into it. They're just really fun. They're not just JPEGs. They're animated. There's music. And they've got this really fun roadmap. There's gonna be a den that you can buy and go visit your fellow party bears. You're gonna be able to buy accessories. There's gonna be music, music drops related. There's going to be actual parties and stuff like that. It was just really fun. So I bought one party bear for 2 ETH. And, usually when I decide to buy a stock, like, I get a little excited about it, and I was like, okay, I've got to buy a stock. As soon as I buy the stock, I'm kind of like, oh, did I really need to do that?
A little bit of buyer's remorse. Yeah.
And then I bought the party bear, and I was like, I love this party bear. Like, this party bear is just cool. And it's just so much more fun than buying a stock. And I also like the fact that, it's a very level playing field. Like, I don't have to worry about the quant funds being smarter than me and having everything figured out. When you're picking out a party bear, you're like picking out the one that looks the coolest to you, or the one, if you're just trying to make money, then you're picking out the one that you think everyone else is going to think is going to look the coolest. And everybody's got a fair shot at that. Like, no one is better at that than anybody else. So I just thought that it was just a really fun experience.
It's a true beauty contest, right? Remember the axiom, you may have brought it up in one of your articles. Essentially, we're not voting on what the best is. We're voting on what we think other people think the best is.
It's the Keynes beauty contest. And the thing in equities is that if you're going to trade equities, like, everyone's already playing that game, so you have to take it one iteration further. So you have to buy the thing that you think everyone else is going to think everyone else is going to think is the best, right?
Bing, bing.
And that gets pretty hard. That's a hard game to play. But in NFTs, like, a very large percentage of the people are just buying the thing that they like the most, right? And then there's some percentage of the people who are buying the thing that they think other people are going to think are going to like the most. So I think it's just a simpler game for now. I'm not sure how long that'll last, but to me, it seems like it's a probably going to be an easier place to make money than equities for a little while at least.
So let me ask you this: would you say that even if your bunny or your bear or your fluffy or whatever project that you like that you got, would you say that the amount you paid plus the kind of the social interaction plus the attachment, the emotional attachment to your JPEG, are those exceeding the actual cash value input, the Ethereum traded?
I would say yes at the moment, but ask me again if it goes to zero. Ask me again, and I'll probably tell you something else. But at the moment, it's been just a lot of fun. And when is buying a stock ever fun? Buying a stock is only fun when it goes up. But just the whole process of buying a party bear was just really fun.
Would it do like Apple or Meta or somewhere that would it make sense for them to issue NFTs against equity ownership? In a sense, to kind of to make this more fun, to make traditional finance a little bit more fun?
I mean, I'm not really sure how you could do that. I mean, I think they can definitely do stuff with it. Like, they could, Nike can give you an NFT that's gonna get you at the front of the line of the next airdrop or something like that. But I don't really see how ownership shares could be NFTs. That would
could your ownership shares equate to some kind of cool NFT like I get my quarterly statements from Apple and my stupid little dividend check. It'd be cool if I also had a button on an email to click and I got an NFT certificate or something, and I could flip it around and there's a picture of the iPhone 64 that'll be out in 4 decades or something cool. I mean, I feel like there are ways to take some of the NFT world and melt it back into the traditional financial world as incentives, as promotion. I mean, we know, well, I assume, a weak assumption is that NFTs continue. Strong assumption, the internet continues, but it's still more interesting, like you said. And so I just think maybe a merger there is interesting at some point.
Yeah, I think I think there is a huge gold rush right now in NFT marketing, right? Like what what Nike and Adidas have been doing, and what's the one that I'm thinking? Budweiser. Like, Budweiser has been really active with it, and I think every every big company on the planet, I'm sure, is looking at it and trying to figure it out. And I think it's going to make marketing as an industry over the next 10 years a lot of fun. My daughter is a junior in college, and I'm encouraging her to get into Web3 marketing because I just think it's going to be a super fun space. A friend of mine, Jeff at Invisible North, is a Web3 marketing guru. You should have him on. He would be a lot of fun. There's just all kinds of fun things going on in that world.
Well, if you put a name in a bucket, I will pull the name out of the bucket and they will appear. We love just kind of diverse opinions. I think we can all agree that no one has this figured out. No one has the space figured out, or they'd have all the money. Luckily, no one has all the money. Therefore, there's a lot of opportunity, especially for new eyeballs and new kind of thought leaders and things like this. We don't know where the next cool project will come from, or where the next 10 cool pieces of utility attached to a project. And so what are, to kind of sum up where your thoughts are just on the crypto space in general, kind of a final thoughts. What do you see happening kind of right now? Where are we at in the life cycle of crypto?
I think we're super early, which is great and exciting. What I'm undecided on is whether super early means that you can just buy everything as an investor. At the moment, I think that's not the case, because crypto is just different than the stock market. Crypto protocols are not companies. They're not going to make the super excess returns that Google and Facebook and stuff have done, because they're all open source software. You can just copy and paste them. And also the SEC is probably not going to let them anyway. So, for the space as a whole, I think we're super early, and I think there's going to be tons of exciting, fun stuff. But what I'm undecided on is whether that is going to correlate to great results for investors. I'm not sure on that.
I like where your head's at. And I continue to love reading your stuff, and I like what Blockworks is doing. If people wanted to kind of hear more from you and hear more from Blockworks, how would they check you guys out?
Just go onto the website, blockworks.co. You can hit me on Twitter. My DMs are open. I don't have so much of a following that I don't answer everybody. So yeah, if you're interested, hit me up.
Well, cool, guys. Definitely check them out, and gals, and pronouns undisclosed, because let us not assume. Thank you so much. I would love it if you would come back. Let's see where our errant thoughts take us. So I definitely wish you well. I urge everyone to go out, check out his stuff, and check out their stuff. There's really, really good articles, and the arguments presented are really good. It's as balanced or more balanced than you're going to get in the crypto space. So I think you should definitely check them out. For those of you that are kind of tuning in your different time zones in various places, we will be, of course, on Money Map tomorrow, and then back here on Wednesday, Money Map Thursday, Friday. Stay out of trouble, stay in school, don't do drugs, don't do anything my poor insolvent drunk strung out on meth grandmother wouldn't do. Byron, thank you so much for your time, and we will see you in the next one.
Thanks, Mike.